Hi everyone, this is Sunny Ahuja and I welcome you back. Today we are going to analyze why the markets went up in April, where the markets are headed in May, and how you can tide through this period of uncertainty and come out of it stronger. The Indian markets have rebounded sharply from the lows made in March and now sit at close to 10,000 in April. There are several reasons one may attribute to this rise. The Nifty and the Sensex saw sharp corrections in March, and that too at a record pace. Hence, some kind of pullback was overdue. Global markets led by the US rebounded sharply, and as you would know, that global markets are interrelated. More on this later. The market likes to do things which one does not expect. Hence, a contrarian approach, which is the opposite of common wisdom, works well in the market. Due to the COVID-19 crisis, traders went overboard, creating large short positions, betting that the market would go down. This added fuel to the fire and the market rocketed up, erasing their short positions. May is here, so where are we headed next? Well, a large part of this puzzle can be solved by simply answering the question, where are the US markets headed from here? There is a strong correlation between the US and other global markets, including India. A couple of interesting facts to note about the US market. The US is home to some of the world's biggest fund managers, namely Warren Buffett and Bill Ackman. Berkshire Hathaway, that is a company that is controlled by billionaire Warren Buffett, invests in listed as well as unlisted companies. In 2020, Berkshire Hathaway has been buying and selling shares in listed companies. However, the amounts that are invested are not large enough considering their overall investment portfolio. What is interesting to note is that the company is holding on to a huge cash pile of as much as 130 billion US dollars. It is a known fact that Warren Buffett does not like to hold on to cash and would rather invest that money given the right opportunity. Rest assured, this money is going to find its way into the stock market sooner or later. William Ackman, also known as Bill Ackman, is an activist investor who runs one of the largest hedge funds called Pershing Square. In March earlier this year, William Ackman took a hedge bet of $27 million and turned it into a $2.4 billion bounty as he bet that investors would shy away from risk assets due to the COVID-19 crisis. Shortly thereafter, he went on to invest $3 billion in risk assets, partly fueling the rally in the Dow. President Donald Trump has recently unveiled a $2 trillion stimulus package to combat the virus and vowed to do whatever it takes to get America back on track again. The US elections are around the corner and scheduled to take place in November 2020. Hence, I expect the liquidity in the US markets to remain buoyant with 0% interest rates and minimal inflation, all a positive sign for stock markets. Another telling sign which describes where the stock markets are headed next can be described by a phenomenon known as TINA. The government has been reducing interest rates, with the benchmark rates down from over 6% in 2019 to 4.4% as of today. Looking at the current situation and the global situation where rates are close to zero, I expect rates in India to stay low for some time to come. So parking your money in FD or government debt is not an attractive proposition. Trading in commodities and cryptocurrencies should be strictly avoided because these markets are highly speculative in nature. Except for gold, but gold too can be held as a small portion in one's portfolio as a hedge against emergency situations like COVID-19. Real estate investment has become a thing of the past as millennials these days would rather rent homes at reasonable rates. It gives them the ability to be flexible at the same time not take on huge home loans. Also, as we know, real estate is fairly illiquid, reducing its appeal. In short, equities are the only place one can hide, reaffirming the there is no alternative aka TINA theory. A scenario none of us see playing out are the markets moving from 10,000 past their life highs of 12,300 in 2020 itself. Can this happen? Well, many people, including fund managers, seem to have missed the bus from the lows made in March to 10,000 levels that we see today, and they are hinting at lower levels to come. Recent headlines sound something like this. India's stock surge, only a bear market rally by the famous newspaper publication, The Hindu. Last month's bounce likely to prove deceptive. Stocks may weaken now by the Economic Times. We view the current rally as a bear market rally, which are common in history by Goldman Sachs. And as per Tim Ord of Phillip Capital, the correction may continue till July when Nifty may see 7,000 levels. Some technical analysts are also coming up with their doomsday prediction, as can be seen in this chart, with Nifty going to touch 4,100 levels after touching levels of 9,900 recently. If the contra market theory is to be believed, then the market should be grinding its way up and making new highs sooner than expected. The fact of the matter is that the big money managers, as discussed before, have the power to move markets in either direction, and there is nothing much we can do. In essence, trying to time the market is a futile exercise. The whole idea of investing is to have the odds stacked in your favor. I suggest the best way to tide through this period of uncertainty is to have a portfolio of stocks in the ratio 60% large cap, 25% mid cap, and 15% small cap. Ideally, some amount of money should be kept aside to make the most of this fall and add on corrections as and when they emerge. There are lots of sector leading large cap companies like HDFC Bank that have corrected and can be bought as part of one's portfolio. Quality small and mid caps such as Vinati Organics, on which I have made a video before, you can see the link to the video in the description given below, can be bought after doing a thorough analysis. Also, if you have a look at this table where major corrections of more than 30% have taken place in the BSE small cap index and mid cap index over the years, you will see that every meaningful correction is followed with a fairly healthy return the following year. Therefore, high quality small and mid caps should feature in your portfolio. I would like to know your thoughts on today's video, so if you could leave your suggestions in the comment section below. And also, if you would like to see more content like this, do not forget to hit the subscribe button. This is Sunny signing off for Sun Stocks. Until next time.